Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, yesterday's action, we saw a reversal after trading up near the R2 number on the S&P 500. I mentioned in yesterday's commentary, I thought we could trade up between R1 and R2. I did not expect to see the 3461 level taken out, but that was taken out and we saw an extreme sell-off all the way through the STX number on the downside. So I'll go through all these details here in a minute. As I mentioned in yesterday's video, it was amazing that there was actually a bid in the markets based upon a stimulus deal. Now, Pelosi gave an ultimatum to Trump of 48 hours, but he had already told her over a week ago that there's no deal until after the election. So somehow she thinks she has power and she's going to bully him. Trump's not easily bullied. Anybody should know that, whether you like the guy or not. There is not going to be a deal. I keep telling you folks that. What we can do now is talk about what's really going on, which is 400 earnings reports that will come out over the next several days. Now, the feature tomorrow is probably the FANGs coming in to feature with some Netflix earnings, but I don't expect much positive to come out of these earnings reports right now, and it's going to keep the markets very mixed and not pointing to any type of bullish scenario that I can see at the moment. Once again, as I've been saying over and over, we're going to be locked in this trading range for a while. You folks need to know if there's a material change in what I'm expecting overall on the markets, that I will let you know. A lot of folks were asking about the ABC down. Is it still valid? The answer was yes. I would have referenced it in detail had it been negated in any way. We did see that sharp sell-off on Friday. All I was expecting yesterday was an update and hold the 3461 level. Well, once everybody realized there's not going to be a stimulus deal, everything fell apart as anyone forgot about any possible support levels, and there was just heavy selling. We saw the S&P down 1.65 and the NASDAQ down 1.65. The Russell did a little better, down 1.24, but overall it was just a very bad day. With all the earnings coming out and minimal economics, we're going to be focused on the earnings for the most part, and there's some significant companies that are going to be reporting this week. So we'll be focused on that. And like I said a minute ago, I don't see any positives coming out of these reports. As far as economics go today, we will have the building permits and also housing starts coming out. Both are expected to show about 1.5 million units. It would have to come out below 1.2 on the permits to be negative. I just don't see any positives that are likely to come out of this market. So it definitely appears that there could be further downside in these markets. Let's go ahead and take a look at the charts, see what they're telling us for Tuesday. As we review the WaveTech database, there were roughly 600 sell signals and 200 buy signals. So we had a negative rotation on the short-term database. We've dropped from around 37% bullish back to 34%. I've been discussing over the past several weeks that the key number is this 42% bullish. If we get above that level, it would indicate that a sustained rally would unfold from these levels. We're not getting that type of activity. We're continuing to see a churning in the database, which is typical within a corrective phase, which I believe we're in, which I'll go through here in this technical section in just a minute. The database continues to suggest that's where we are. I went through a lot of detail in the intermediate database, which suggests we're still in a positive intermediate tone, but we're not seeing anything here that is going to tell us that there's a short-term rally coming in the market. As I review the S&P futures, in yesterday's action, we did see a move up toward the R3 level, 3501, with an intraday high of 3496. Now the market reversed, traded down exactly to the STX number at 3410.75 with that low of 3410.75. So we closed on the bottom of the session. We opened higher in the evening. We're currently up 0.38% overnight, up 13 handles. We were up a bit higher. The expectations for today is to remain above the S1 number 3407 and below R2, which is 34.54. The high so far overnight's been 34.45, and the key number will be that 10 period moving average, which is still rising in the pattern at 34.63. Well, notice that the PPMs have turned up even though we're trading below the 10 period moving average, which suggests that we will move back toward that 10 period moving average over the next day or so. The key levels to watch on the futures will be 34.07 and the 33.98 level, which is the 40-day moving average. I don't expect that we'll get below those levels. However, the next level to look at is 33.98, and below that, the support will be down at S3 at 33.74. I don't expect that will be reached today, but those are potentials within this pattern. Now, we've seen so far 5 days down. It's possible we'll see 2 to 3 days sideways trading in a range. If we stay below the 10-day moving average, that will be significant. As we go to the S&P cash, yesterday we traded sharply lower and we went through the STX number, which is 34.40, trading down to 34.19 and then closed at 34.26. So closed below the STX number and substantially below that 34.63 number, which is the 10 period moving average. As I mentioned in the futures, same thing here. The 10 period moving average will be major resistance. As we look at the R1 number for Tuesday, you're going to see 34.39 and then 34.54. That's likely to be the upward resistance range for today. And if the market is able to remain above 34.13 today, then there would be an S1, R1, R2 level on the upside. It looks like we will be slightly biased to the upside on Tuesday if we can hold that 34.13.86 level. The pattern that I've been discussing over the past several weeks is this upward ABC. Now we're looking at an ABC down. We should complete the ABC somewhere between these level I just mentioned, between 3400 and 3491, which would be the 40 period moving average. The STX support level is 3400.88, so there should be substantial support at those levels today. The expectation is once this is completed, which could have 2 more sessions in it, would be a B wave up and then further downside. This pattern appears to be very clear at the moment, and it would take a close above 3502 to negate this downward pattern at this time. The next market I'll cover is the NASDAQ futures. We are also trading below the 10 period moving average. It's still rising in the pattern. It's actually up 0.36, which suggests that the 10 period moving average will act almost as a magnet to draw the market back toward the 11,791. The high so far today has been 11,748. There could be more upside in this market, but as we look at the grid for today, 11,789 is the R2 number, S1 11,584. We're trading between S1 and R2 right now, so I suspect that will continue to be the range as we come into the opening tomorrow. The NASDAQ is up 0.38. The open in the morning, if we take out the S1 number, then you can see that then the expectation would be for a further decline down to the 11,510 level, which would put us at the 21 and 40 period moving averages, which are 11,505, 11,523, which is going to represent a substantial support level if we did trade down to that pattern. The next market I'll cover is the US dollar. We did see some weakness as the evening started, and now we've rebounded and we're trading back toward that 10 period moving average that I've been discussing over the past several days at the 93.47 level. In fact, the last is 93.47. So we're seeing it trade around that average. We also held the 93.37 level, the low overnight 93.39. If we look at the grid, 93.30 is S1. That's going to be the main support on the upside. 93.54. We're likely to see an S1, R1 level for the US dollar. But as we look at the PPMs, they're very mixed. We don't have any trends either up or down at the moment. So this is a very neutral pattern. As we look at the weekly chart, that 93.33 level comes in again. My expectations are that we will trade between the 10-week moving average and the 21-week moving average, setting up a range of 93.33, 94.61. We're currently 93.48, so that is going to be the trading range for this week. Now we're also seeing, as we look at PPMs, the PPM1 is positive, PPM2 is negative, but it's about to cross over its second derivative, which suggests that we will likely move up toward that 94.61 level. The final market I will cover tonight is gold. And as I've been discussing, this market is locked between the 10-week moving average and the 21-week moving averages. So far, we've seen a high-low for the week of 1896, 1923. The 10-week moving average is 1927, and on the downside, the 21-week is 1891. So it's almost a perfect hit within those ranges. I don't see us getting out of this range. I think it's going to be a very tight range, but if we do get out of the range, there's more downside here than upside, which would coincide with the analysis on the US dollar. If we continue to see some strength there, we're going to see the gold press down toward the support level on the weekly chart. The interesting thing here is that S1 is 1891, which is exactly the 21 period moving average. So the expectation looks like S1, R1. If we did exceed the 1891 level, the next level down is 1875, and there's not any major moving average support until we get all the way to 1800, and that doesn't appear to be likely in this pattern at this time. But all the PPMs, everything here, are neutral to negative at the moment. We have a downward PPM at a 0.25 on 10-week moving average, and on the 21-week we have a plus 0.31. So basically we're locked until further notice. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night.